Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, June 1st, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. We will look at some charts. It's up to you to take that interpretation and to make your own interpretation to determine how to trade in your account according to the size of your account and your risk tolerance. With that, let's take a look at the week that just took place and take a look at the economic announcements as we had a holiday week. Monday, the markets were closed, and therefore no big movement in the market. As we came into the market on Tuesday morning, consumer confidence was at 10 o'clock, but the market took off from the very beginning. We had a very strong Tuesday. And then we got some of the Euro news, and on Wednesday, it went right back down. No big news there that caused that other than market movement. And then we approached Thursday, which we talked about last week, and said that it would be a big day in the market. As we saw, we had plenty of announcements going on. First one, 8:15, ADP unemployment report, which certainly can be a forerunner to the employment situation, which is a monthly report, which will take place at 8:30 on Friday morning. When we looked at employment report, we saw that it was much less than what was expected. We were looking for 157,000 jobs, and we ended up with 133. Not exactly what we were looking for, and so therefore a bit of disappointment at the 8:15 numbers. GDP at 8:30 also showed some disappointments as to for expectations. And then finally the jobless claims didn't give us much even better hope, as typically what we've been seeing for the last 4 or 5 weeks is around 370,000 new jobless claims taking place in the week. But the numbers this week came out to 383,000, and expectations were for around 368,000. So also didn't provide any impetus to the upside. In fact, it was just the opposite. Friday morning, we're looking at the monthly report for the month of May, and we'll see that at 8:30 as we'll look at the employment situation and find out how many jobs there actually were during the month of May. So Friday morning will be a big morning before the market even opens, and certainly could influence the way the market's going to go. So what you might do as an investor and as an active investor, if that's what you are, is take a look and see how those numbers come out and see how they affect the futures, and could give you an idea of where that market's going to open Friday morning after that economic announcement. Effect on the S&P this week was pretty dramatic, as we had a very shortened week. We saw that on Tuesday we were flying up. On Wednesday we were flying down as the Euro news came out, and certainly had an effect on the market. And then here we are on Thursday, where we didn't get any great data out of the market, and we dipped below that 1300 level for the second time in just about 2 weeks. So a bit of a pullback as we looked at Thursday in the market because of disappointments. Now let's take a little closer look and see what the day looked like. As we look at the day, we dipped below that 1300 level, as we can see there by where that tail went to, but then it kind of tried to rally back, and as we came into the close, it just couldn't hold up, and we did end up in negative numbers for the week, for the day on Thursday. And of course, going into those Friday numbers of those employment numbers, it certainly puts them in a position where we can see what kind of an opening we're going to have on Friday morning, with those numbers being very important to us as we move forward. Take a look at the market tomorrow morning or Friday morning and see exactly what kind of effect it has on the futures between 8:30 and 9:30. It'll give you an idea of where the market's going to open and what effect it might have on the market, as those numbers will be announced. When we look at the Dow, we see that the 3 days this week look basically about the same. Stayed above the 200-day moving average, but certainly dipped below levels that we'd like to see it going on. as we continued in a down cycle and what looks like somewhat of a sideways trend here on the Dow as we're working our way into this summer trading range. Looking at the NASDAQ, which certainly is the stronger for the year, we see that it also went into a down cycle, well above that 200-day moving average, but certainly below that 3,000 that we were at not very long ago. Looking at the Russell 2000, let's take a look at that, and we see that as it had moved up in a little bit of an upcycle after that 15 days worth of pullbacks, we see that it certainly did know how to go into a down cycle again. But notice, this is a reversal signal, but we're waiting for confirmation on this morning, Friday morning, to see exactly which way we're going to go. Watch that first hour of trading to give you some indication on the Russell, on the Dow, on the S&P as to where the market's going to go on Friday as we go into another weekend. The VIX, of course, bounced high. The fear index trading above that level we like to see it at, between 20 and 14, where it spends most of its time. So there was more fear in the market as the market pulls back, and that generally is to be expected. Next, we'll take a look at bonds, and we see that bonds went up as they were a flight to safety because of that data which came out on Thursday. Now, bonds really shot up and probably are somewhere near the high of the year. Financials did rally a bit at the end of the day, as we can see. And so with that, we can see that that is what helped the market rally as we went into the close. Financials moving. We look at our SPDR XLF, the Select Sector Fund, and we see that the financials are trading sideways, hovering around that 200-day moving average. Next, let's take a look at our next ETF, our Exchange Traded Fund, and look at oil. We see that oil has certainly been in a downtrend as it continued that way today. All right, we're looking at USO, the ETF for oil. Next, we'll take a look at another exchange-traded fund, which is the GLD, which is the gold fund, and we see that it is trading in a nice sideways direction, in this level between 155 and down there about 145, somewhere in that level. Look at your individual charts to get the actual numbers, but we seem to be in a sideways trend on gold as we head into the month of June. Now let's take a look at our next exchange-traded fund, and we'll look at, not a exchange-traded fund, but yes it is. It's the SPDR. It's the SPY. It is a way to trade the S&P without actually trading futures. And so we see what kind of volume we had today as we had this day where it popped up, popped down, pretty wide trading range for the day. And we see that it was done with volume. So there was some commitment. Watched on this morning after the news announcement to see which way this market's going to trade. Is it going to gap up? Is it going to gap down? What is it going to do? Those numbers certainly will have an effect on us at 8:30. So with that thought, for those of you that have gold memberships, we'll be looking at some of these charts during our gold portion of this video. Meanwhile, the rest of you, thank you for being here. This is Butch Shorrock, Options University, Friday, June 1st, 2012.